Hello friends, welcome to Expert View, and we have an extraordinary guest with us today. Rob Taylor, MD of 4GD, joins us, and it's not every day we get an ex-Royal Marine amongst us. Welcome.
Lovely to be here. Thanks for having me.
Thank you so much for coming. First of all, please tell our clients, our viewers, what you and your company do.
So 4GD was founded in 2016. When I left the military, we effectively lived through the Afghanistan and Iraq era. And I got this sense that the next conflict wasn't necessarily going to be the same thing, sort of Middle Eastern insurgency. And I also look back at what the things that affected me when I was serving in the Royal Marines were, which was we had all this equipment, expensive, fantastic equipment when we went deployed on operations, but we never trained with it back in the UK from a cost, danger perspective. So what I wanted to do is create a company that could train our troops with both the existing complex systems, but also with the future systems that you could see were coming in. So we founded around two principles. One was urbanization. We wanted to help people train for what we believe was going to be future conflict in more Western sort of urban centres. And secondly was a system that allowed highly complex weapon systems like drones to be used. So effectively, we build buildings, and inside those buildings, troops can train like they would have done for hundreds of years, but then have a load of simulation around them. So drone simulators, artillery simulators, to help the military train for the future war, but at a cost that's sort of realistic and acceptable to them.
Nice, nice. And also, what a crazy, interesting time for you, because, all this that's happening in real time must be great for, making the simulations, and talking about them come to life. The war is very interesting for our clients because obviously they're seeing their positions change dramatically overnight. Mm-hmm. What do you think, from your lens, what do you think are the likely scenarios from what we know so far?
So it's interesting. I think I'll first focus on business and then maybe look at sort of the geopolitical side of things. But I have a sort of cautious cynicism when it comes to things for the military. I think what's been great for the market in the last 4 years, I mean, clearly not from a geopolitical perspective, but since Ukraine and the invasion through to military operations in Iran, the markets have focused much more on defence. There's obviously political interest, media interest, financial interest. What, however, I'd just caution is governments move slowly, and defence, specifically the Ministry of Defence, moves even slower. So what I think your typical sort of investor would expect is war in Iran equals immediate acquisitions. And there will be some of that, and we'll come on to what I think those could be. But I think actually what you'll see is a much slower sort of turning of the ship. We saw after Ukraine, I think there was an immediate expectation that defence spending would go through the roof. Here we are 3 years later still talking about defence spending. So I think there's always an anticipation of thing happens, immediate change, whereas actually thing happens years of talking about before change happens, if that makes sense.
And certainly, everyone has been surprised by the lack of spending. As you know, I go to the DSEI. Many say it's to do with the central agency that's in place, that's absorbing the resources. Others say that actually whatever's been already proposed, promised on spending, well, actually it's already not enough, even if they were fulfilled. Mm-hmm. What's your view?
I think both those things are true. I don't think they are mutually exclusive. So I'll focus on the second first and then the first second. So there is an element of honesty that I think we need to have both as a country from a macro spend perspective, but then also within the defence community, which is effectively the MOD is overspent. It's been publicly spoken about, to the tune of somewhere north of 40 billion over the next decade. So if you assume there's a 4 billion per year delta that needs to be covered, and then you look at the incremental increases that are being mentioned through the Strategic Defence Review and into the Defence Investment Plan, there is going to be a large chunk of the new money will just be effectively taken up on projects that already exist. So when we say new money, I think we need to be careful on, is it new capability that hasn't been spoken about, unmanned autonomous systems, counter unmanned autonomous systems, or is it actually covering the holes in existing programs like Ajax, Morpheus, and the programs that are in the media? On the procurement, I think if we look at the UK's results in terms of budget against numbers of or sort of output, I don't think we're doing very well. We are still a well-funded military in the UK, but I still think we have a bit of a problem on what we get for our money. So there is an element of how much money is there, point one, and then how are we spending that money, point two. And I think that's the conversation that needs to happen a bit more.
Let's talk about the primes versus the neo-primes. Loads of investors looking at this are thinking, oh, drones, gotta be drones. Last week we had the drone ETF that was just announced by Han ETF. We've also got a lot of interest in Red Hat is one of those that one of the stands. I keep calling them Red Hat, but they're Red Cat. And they were super busy at their stand. I had to wait to speak to them. Loads of other big, obviously, primes also in the drone business.
Yep.
What would you say to investors thinking, oh, do I put money in the primes or neos?
So I would say this is my opinion, but there's a two sort of pronged approach here. But there are three areas in the business, and I would deliberately say that. I think the engagement or the conflict in Iran is going to see a effectively return to the boring. And what I mean by that is, over the last 3 to 4 years, we've heard an awful lot about neo-primes, drone companies, and sort of startup scale-ups, West Coast type funding coming into the defence market. And I'll come on to my thoughts on those in a minute.
Anduril.
The Andurils, the world, Helsing and Stark on the European side of the market. And we'll come on to those in a minute. I think the reason I think there'll be a return to the boring is the weapon systems that both the US, UK need now are ones made by the BAE, Lockheed Martins, Raytheons of the world. And, as you can see on the graph that you brought up, that is being reflected already. And I think when Donald Trump calls a meeting requiring Lockheed Martin, Raytheon, I can't remember the other two, to go to discuss accelerating production of missiles, that's a pretty good demand signal that the American defence community is about to put an order in for significant existing capability. So to me, there's always a tendency to go to the exciting. I always think actually the companies that have been here for the last 50 to 100 years are still going to be the ones in the best place to exploit. In terms of the neo-primes, I have a bit of a cautious view on where neo-primes are at the moment, which is they are being funded as if there was an exponential market growth about to happen. Think about the social media explosion in the mid-2000s. There was an undetermined market that has grown exponentially, and thus all the funding went in, had a chance of return. My worry with the neo-prime mentality is twofold. One, the market is only growing by about 8%. So, even the increase in defence spending from 2.3 to 2.5%, that's only really a 7 to 8% real terms market growth. And even from 2.5 to 3, it's then only a low double digit growth. But the big thing is if you imagine a parking lot with 15 cars in it, and there's space for 15 primes, let's use sort of prime as a car analogy, unless the government are prepared to eject a couple of those cars and allow a new company to come in, they still have to sustain the revenue required to support the existing prime suppliers. And I feel at the moment what we have is a sort of two-tiered market where you have the real defence industry, Lockheed Martin, selling missiles that exist, and then you have the neo-prime, which is largely funded through venture funding. And there will be a point where these companies have to convert from spending venture investment through to revenue. And I feel that's a bit of a sort of clash that I don't think has been really appreciated by the market yet, unless defence spending either goes up exponentially, or if the government go, right, we are going to move an Anduril in, but we're going to move an existing supplier out. The one thing that's interesting that I think is not being spoken about enough, though, is the companies who provide capability into the supply chain of the primes. And I think that's the area that, to me, is the one that could be exploited, which is companies that make engines for rockets, companies that potentially build the targeting systems for the drones that the primes are going to build.
And the picks and shovels.
Exactly, the picks and shovels. Defence is an industry of collaboration. And one of the things that's really sort of perturbed me when it comes to neo-primes is this confrontational attitude they have to the primes. A lot of these companies have cash flows looking out 20, 40, 60 years in advance. You're not going to destroy them, no matter how much you say it on LinkedIn posts. And so to me, we should be looking at the collaboration. So I think the really exciting companies are ones that slip in to the supply chain of the existing suppliers. They will have exponential growth because a lot of the primes have limited capacity to expand production. So those are the ones we should be attacking. And I think these neo-primes are getting a lot of attention. They're very visible. There's a lot of money pouring into them. But actually, there are better investments to be made, would be my view.
Many of these outfits as well that are contractors and suppliers, right? Many of them just bear in mind that they also supply space. And so you could have what I call a double bubble scenario there. So I like double bubble. I like it when a company not only supplies defense, for example, they also supply space and aviation. And so the likes of Leonardo, MBDA, Thales, Airbus as well, they offer that double bubble. What I'm also interested in is, and feel free to tell me, Ange, you're absolutely wrong. How crazy is that? So for Europe and defense, I came out of the NATO ETF. Many of our clients here also like ETFs because after the first quarter, my theory was if I didn't see any new spending pledged, then actually it was going to take a long time for that spending supertanker to pivot. When is the pivot?
So I think the pivot will happen in the so a good example, I'll come back and then go forward. So a good example in the immediate will be in the UK, you've got the Defence Investment Plan that we've all been eagerly waiting since August last year for. That will free up, it won't be the spending explosion that we need, but it'll be at least the taps will turn back on. There's been probably the thing that has not been spoken about over the last 2 years is ever since the election in 2024, defence spending, especially new money, has basically stopped. There's been the ongoing contracts that were won before, but in terms of new money, there's basically been none. So the first thing is to get the taps back on before we turn the taps up. To me, if we're looking at the UK market, that's going to be probably when we get from 2.5 to 3%. It's not going to be from 2.3 to 2.5%. And to me, that's where I think the MOD have been slightly culpable, if I'm going to be honest, in there has to be an understanding when you say something in public about spending and encourage markets to react, you are effectively creating a market signal or a market demand. And that's something I think the MOD are tightening up. They've realised they probably were a little bit too haphazard in their approach. But to me, it's the 2.5 to 3% is when that funding really gets turned on. Now, there are other markets, and I think you talked about dual use in terms of space and defence. What I'd be looking at is companies that are attacking other markets, not necessarily outside defence, but the US, there's been talk of going from just under $1 trillion to maybe 1.5 trillion. Now, whether or not that's realistic, that's a huge jump in defence spending. That's not a point. That is, 50%. And so to me, it's companies potentially that have maybe the US as a home market that then do stuff in Europe. That's, to me, I think much has been made about European defence, and I think there's a huge opportunity here. I would just caution people to remember that the European defence market is made up, I think, 27 different procurement agencies. So there is still a complexity that, yes, it's commensurate with the US market in terms of scale, but it's 27 times more complicated. So the US is still going to have that lead. So I would be not only looking at dual use in terms of applications, but maybe dual use in terms of market access. Is this company also focused on the US, in which case good, and not entirely reliant on a UK market that talks a very good game, but potentially doesn't act a good game?
Let's widen this out a bit because, the other thing that's been keeping me awake, as you know, is the fact that I can't see, maybe I'm missing something, I can't see a way of this conflict at the moment coming to a swift end, right? We've seen Iran firing at least 5 large waves of ballistic missiles at Israeli cities recently. We had Baroness Neville Jones speaking to me saying that, she thinks the Americans are caught off guard, that actually Iran spread this to its neighbors. We've also seen that this new leader, which I find crazy as well, because the moment you name someone as a new leader, he just has to go and spend a penny and he'll get taken out. So where are we heading? What is the end game, or is it? Am I running a fool's errand to try and find some logic to this?
I mean, this is where we drift into my personal opinion, but I think I heard an opinion made last week that the war will be decided by materials and markets, which I thought was a very nice turn of phrase, which is
materials and markets
rather than outcome, which is how long can the US sustain a highly complex missile-based operation? How many missiles have they got left?
So when their cupboards run bare.
When the cupboards run bare. And also, when does this start to have impacts on markets like energy? When does that effectively start to create a pressure from the global markets that this has to come to an end? Now, in terms of the strategic aim, this is, again, my opinion, I think the lessons of Iraq and Afghanistan are being spoken about a lot. I think they are probably restricting the full range of military options to effectively arranged conflict. My sense is there's been some surprise by this sort of scale, and I don't mean scale in terms of number of missiles, I mean scale in terms of the number of countries Iran have countered against. To me, that's potentially a bit of a sense of desperation, as much as it's a sense of a strategic plan. But I think it's going to be, and this is my opinion, it will be markets and it will be materials. And ironically, the beauty of this conversation is it showed, I think a great example would be the issue in Akrotiri, where a drone hit a RAF airbase, almost encapsulates the problem we're seeing in defence. There has been great rhetoric, there has been great public statements, but at the end of the day, a relatively low-tech Iranian drone, taken off from Lebanon, flew into one of our most important strategic air bases with no countermeasures. And obviously we've seen the fallout of that politically over the last week. To me, that was a good indication of the cupboards are bare, we don't have the capability, and you can't, when there are actual missiles in the air, you can't use rhetoric to cover up shortfalls. And so to answer your question, I think there is probably a positive and a negative. The negative is what will the outcome. I think there's probably as much, as well as materials and markets, is what does the Iranian regime do next? Now they have identified a next leader. But I think to me, there is also going to be when does the global energy market start to be impacted to a point where the pressure on the United States administration is too great to bear? Or how much longer, how many more Tomahawk missiles do the Americans have, and how much of their strategic reserve are they willing to deplete in order to achieve an effect in the country? And that's where the positive comes in that I think we've all kidded ourselves for a long time, the peace dividend that we all speak about post-World War II. We don't need massive arsenals. Well, you do. Because ultimately, if you've only got the artillery, missiles or projectiles to fight for 2 weeks, well, if the enemy's got 3 weeks, you're in a pretty weak and not particularly a very precarious position. So I think actually the positive in this will be we start taking this a hell of a lot more seriously. The negative is, I agree with you. I'm not entirely sure I can see what the outcome is. And I think that's been part of the problem is what is the defined outcome of this conflict? What is the point of it? Is it regime change? Is it slap across the knuckles? Is it the reduction of the Iranian nuclear program? Is it all three? I think that's the question that obviously we're all looking to be answered.
Yeah, and Rob, the other thing that smelt of desperation was the fact that India now can buy oil from Russia. There's this waiver, right? Yeah. And that to me is kind of like, guys, that they were the aggressor, but now America's saying it's okay, you can buy as much oil as you want, India, for I think 30 days, is it? And that to me kind of smells of, well, if they don't do this, they don't have the waiver, then India could potentially have no energy.
Yep.
Are governments and are the contractors that you're speaking to, are they waking up to this fact?
Well, is it Clausewitz said war's an extension of politics by other measures? I think this is where you come into the market perspective we discussed, is conflicts only go as far as when other countries start to not be able to power their country. And obviously the Indian reliance on Russian energy has put an interesting dynamic in. The other one I would come back to is, isn't it interesting that some of the strategic assets that Ukraine have been calling out for the last 3 or 4 years, how good they are, and actually the impact these weapon systems could have. I mean, one of the things that I think hasn't been spoken about is how phenomenal Western capability, technological capability is against potentially adversaries' counter systems like anti-air systems. For years when I was serving, we heard that the Russians and the Chinese had the best counter missile and anti-air systems on Earth. Well, that's been completely dismantled over the last 4 years with Ukraine and maybe the last sort of few weeks with Iran. So, I mean, I agree. It's interesting. I think it's forcing some very, maybe not questionable, interesting political decisions, at least I'd say. But I think it's a great proof of the material or market point. We're already seeing waivers being issued to prevent catastrophe to what I suppose we consider regional partners for the US.
This is fascinating stuff. Is there anything else, Rob, that we haven't spoken about that you think investors have missed or should really be looking at?
One of the things that I think is always missed in defence is a colleague of mine describes it as a sort of triangle. We're doing business with defence. If you do business with any other industry, I mean, I suppose it's the same in all markets, but the requirement, does the person want the thing? Does the person have the money? I mean, that's often the normal one. The one thing I'd say with defence, it's the contracting route. It's if the client has the money and you have the capability, it's how do they how do they actually buy it? And I think one of the things that I think the investment community potentially haven't clocked onto is the contract and the ability to win contracts is as, if not more important than whether the product you have is what the client needs. And that might sound a bit perverse, but a lot of the neoprime investments are based on outstanding bleeding edge technology. A giant chunk of these companies have never won a competitive tender with either the Ministry of Defence or Department of Defence. That is a huge red flag to me. I would be looking for companies that have won competitive tenders, have proven they can actually access and engage the market, and then potentially have some revenue. And I know there's always this sort of long-standing joke that venture hates nothing more than revenue. But I think with defence, that is a fairly naive assumption. Find the companies that sit in supply chains that have both B2B and B2G opportunities, have proven an ability to win both. That, to me, would be the gold ticket with defence. Finding a company with a great website, cool technology, but that hasn't won a competitive tender, that would be a red flag for me.
A final thought on a company that increasingly has bigger and bigger stands every time I see them in Davos and DSEI, Palantir. Any thoughts on them?
So Palantir are an interesting one because they sit across, so I've said about single technologies, I think one of the things that both Palantir and Anduril have done well is, if you look at the most successful defence companies, we had BAE's price up a minute ago, Lockheed Martin, Northrop, all these companies do everything. Lockheed Martin are about to be a critical player in putting a manned mission into space. They also make planes, they also make ships. Yet the investment community typically invests in myopic single technologies, and I find that a bit perverse. I think what Palantir and Anduril have done well is they've diversified. They don't just do one thing. They don't just do one aspect of defence, which I think is a good thing. I think the one thing with Palantir that's going to be interesting, and one thing that Europe is in the process, I think, of working out is, what does sovereignty mean? Does sovereignty mean a company that is from the market, that is effectively focused on the market, or does it mean a foreign entity, in terms of Palantir, that has a local domestic office? And to me, I suppose the risk would be if Europe decide that they want to reduce reliance on US technology. That would be obviously a risk to Palantir's expansion in the UK and Europe. Or does it decide that actually the inward investment that you receive by giving companies like Palantir, Anduril, Helsing, all these other sort of neoprimes markets is a good thing? I mean, my view is I think there should be a bit of a balance. I think the UK is being taken a little bit for fools at the moment. The Germans, I think, have launched a fantastic domestic campaign. Their Bundeswehr released their investment strategy, and it was predominantly German companies. There was a huge piece of the pie for Helsing and Stark, two German-based autonomous companies. The irony is in the UK, we're backing Helsing and Stark to the same level as the German government doing it. And to me, I'd like to see the British government potentially back British business. And by that, I mean companies that are founded here, that pay their tax here, but most importantly, that at least a decent chunk of their equity is held here, because otherwise we're just issuing contracts to company and that there's an outward flow of capital. So I'd like to see a bit of a hybrid. Now, on the flip side, there is definitely going to be capability we can't do ourselves, and potentially a little bit of a reality check as a country that maybe we can do one thing really well. Maybe we can do space, but actually we're going to have to outsource production of fast jets or drones. I think potentially a bit of a hybrid is the way forward.
All right. Thank you very much, Rob Taylor, MD of 4GD, talking about why you should be looking at the primes rather than the neoprimes. For more details, any questions to Rob or myself, please put them down here, down below, or ask@ig.com. I'll get them answered and straight to you. Please hit the like and subscribe button, and I shall see many of you soon at our next trading and investment event.